what is an incredible day all around, not just for markets, but for the economy as well. An interesting data point coming out of the employment space, and of course, a market reacting to it in a very negative way.
Yeah, good news is bad news. How many times do we say that? We saw such a big move up in rates, and that's certainly significant in terms of expectations about the Fed. Having said that, I got to say, Tim, one of the things that we've talked a lot about, the airline sector today, courtesy of those Delta numbers and Delta outlook, and you see the whole space up about 4.5%.
Okay, you're talking about airlines. I'm looking at yields moving higher because Alex isn't here. I don't know if Romaine or Scarlet is going to do yields in a minute, but guys,
it'll be a surprise.
476 on the 10-year?
Yeah.
We're really talking about that again?
Yes, we are, man. 476 on a 10-year. You're talking 5 on a 20-year, 5 on a 30-year, a 2-year at 4.38%. Are you poo-pooing this?
I'm just going to say we have a couple of inflation prints next week, another one at the end of the month. I'm just saying we're totally data dependent, Scarlett, and I feel like things are going to just keep moving back and forth.
It is, but the momentum is certainly for yields to move higher. And given the jobs report that we got today, you have Bank of America saying that the cutting cycle is pretty much over at this point, and the risk is that the next move will be a rate increase.
All right. I got a bone to pick with Carol, but we got to put that on hold for right now here. As we get the closing bells in New York, we have a lot to talk about today here. Of course, a monster down day for all of the major indices with the S&P 500. Looks like it's leading the charge down on the day, down about 1.6%. It always takes some time for these numbers to settle, but that's going to be the worst day going back to mid-December, and it's now back down to its lowest levels since November 5th. So erasing all of the gains on a year-to-date basis, and they were modest gains, but also erasing all of the gains since the election, with the asterisk that a lot of those big gains that we saw in the S&P came kind of ahead of the election as well. Down 91 points or 1.5%. The Dow down 700 points or 1.6%. The NASDAQ down 300 points or 1.6%. And look at the Russell 2000, a 2.2% decline here on the day. Mid-caps down 1.4%, and transports, Carol, down 1.1%.
Yeah, a definite negative tone, no doubt about that, in terms of the equity trade. You look at the S&P 500, most names in the index lower today, 434 to the downside, Scarlett, only 67 gaining some ground here.
Yeah, but the ones that did gain ground all belong, or not all belong, but many of them belong in the energy sector. That is the lone slice of the pie there. That is green. Energy index gaining about 0.3%. Utilities, the next best performer, down 0.6%, along with healthcare. Among your big laggards here, real estate investment trust losing 2.5%, financials down 2.5%, and tech losing about 2.25%.
All right, let's get to some of the individual gainers. I do have an energy name, in fact, on my list. I'll get to that in just a moment. I mentioned airlines definitely outperforming today. Thank you, Delta Airlines, for being the catalyst, up about 9% at its close today. In fact, it is the third biggest gainer in the S&P 500 today, jumping the most in more than 4 years. I think we might have seen potentially a record. There was certainly one intraday. Carrier's profit beat Wall Street's estimates for the final months of 2024, buoyed by gains in both the U.S. market and overseas. Yeah. The company does not expect the momentum to slow in the new year. What do you got for me?
Well, can I just say, as somebody who's booked 3 different flights over the past couple of weeks, I understand why they're making so much money.
Where are you going?
It's a secret.
Oh, are you bringing me?
No, I'm bringing
International man of mystery.
Me and Carol have to talk.
Yeah, we forgot to tell you. Oops.
Okay.
Yeah, actually hitting a record, it looks like, in today's session. Another one way outperforming, and that is Walgreens Boots Alliance, guys, up about 27%. This is your number one gainer in the S&P 500. Again, searching the most intraday, even after it reported, I should say, quarterly sales that surpassed Wall Street expectations, easing some pressure. This is a company that's thinking about a transformation, trying to figure out what it needs to be, what it needs to do, also mulling some strategic options, including a possible sale. So nonetheless, investors liked hearing that performance here. And one more, Scarlett, you mentioned the energy names. Constellation up 25%. Again, I believe closing at a record here, surging after it agreed to acquire the closely held Calpine for $16.4 billion, creating the largest fleet of U.S. power stations. So much of this and so much of the expectations and excitement over Constellation and other energy names has to do with powering all of the energy that is needed for AI. So anyway, this was a big outperformer in today's session.
All right, I got a constellation for you in just a minute. First, though, Apple shares declined by a little more than 2%
You missed a great
today.
opportunity there. Great segue. Constellation.
Yeah,
the second biggest gainer in the S&P.
Yeah,
Constellation Brands.
We'll figure out
the
another
biggest
way to do
decliner
it,
in
yeah.
the S&P.
Yeah,
Am I stepping on your toes, Tim Stenovec?
Okay, let's do that one. Let's just do that one. 17% to the downside. They make Modelo, Kim Crawford, High West Distillery, and others. Remember, we've been talking about the way that consumers are not drinking alcohol. like they used to. The company cut its growth outlook for a second time this fiscal year. They missed quarterly sales estimates. They cited lackluster consumer demand. Shares fell 17%. The folks in the control room, they're not happy with me jumping around, but I'm going to go back to Apple because it was one of the biggest weights to the downside in the S&P 500. NVIDIA was the biggest one. That fell today by 2.4%. Shares down about 9% from those all-time highs back in December. You've got that noted analyst, Ming-Chi Kuo, who came out with a note that 2025 shipments of iPhone could be 8 to 10% below consensus. He published this in a post on Medium this afternoon, also writing that there's no evidence of Apple Intelligence actually driving hardware upgrades and service revenue. He's got a pretty good track record, so people watch what he says pretty closely. Finally, watching shares of insurance companies out of California as a result of these devastating wildfires. You got Chubb down, you got Travelers down, Allstate down today by 5.6%. Analyst estimates of potential wildfire-related damages continue to soar. JP Morgan out with a note, $20 billion. Our own Bloomberg Intelligence team out with a note as well that says it could exceed $20 billion. Southern California utility firm Edison International also fell today after the company is asked to preserve evidence in connection with the blaze. PG&E, I should mention, was lower too.
Absolutely. Well, let's take a look at yields, because the only thing more dramatic than what we saw in the stock market was the move higher that we saw in yields, a massive sell-off in the Treasury space. In fact, 6th straight day of selling that we've seen there. And take a look at the 2-year yield, up 12 basis points. Of course, that is the most sensitive to changes in Fed policy, 4.3792 and change, 4.7 on your 10-year yield, a 20-year yield closing above 5, and a 30-year yield that at one point in the session also traded above 5% for the first time in more than a year.
Yeah, pretty significant. Talking with our Michael McKenzie about rates. You know, we've seen the longer end of the yield curve moving up, but to see the short end really move up in terms of expectations for the Fed doing less here in 2025. All right, what caught our attention has to do with CEOs and big executives and folks on Wall Street. We're going to start with the CEOs, what we're seeing. Bloomberg Intelligence out with a report today. The headline catching our attention: CEOs are on a shorter leash thanks to shareholder activists. And they say CEO turnover is related to an overall rise in the number of shareholder activist campaigns. But what caught my attention is they say more notably companies that push out a CEO when an activist comes knocking are doing so with record speed. They're not waiting.
Yeah, CEOs lost their jobs due to activist pressure at a record pace in 2024. 119 were let go. It's about steady versus the record high back in 2023, but up about 26% from the 2018 to 2022 average. Yeah. So those activists, Romaine, they've got some power.
Absolutely. And speaking of CEOs, I guess stepping aside, we learned a little bit earlier, based on people familiar with the situation, that the CEO of Hershey's would step down. Hershey's is now confirming that, out with a public statement saying that Michelle Buck, who has been CEO of Hershey's since at least, I believe, 2017, will be leaving the company, but she's not going to leave until 2026, they're saying. They have launched a search for a successor, so she'll be sticking around for at least a year to oversee the company and presumably to help, of course, with that CEO transition. We should point out she's also been with Hershey's Food for about 20 years. She's in her 60s, so no sense here that she was forced out, but a changing of the guard for Hershey's.
Yeah, fits in with that theme again of CEOs being swept aside. Another big story that we've been focusing on here is bonuses, right? Because people are going to get paid their bonuses pretty soon at the big banks. We already know that Wall Street bonuses will likely jump by double digits, at least 10% at JP Morgan, at Bank of America, at Morgan Stanley. Deutsche Bank has signaled that as well, but they're tweaking their bonus formula, or how they judge bonuses, to incorporate factors like teamwork, which has got a lot of people nervous.
Wow.
How do you measure that?
Then we should all get a massive bonus. Although, Romaine, I don't know about that for you.
Yeah, that's all right, Carol. You know that any bonus I get, they just basically take from your pool. They say, Carol gets a little less this year, Romaine, because, we love you more.
I just want the popcorn upstairs, and I'm pretty happy. I'm just going to say.
I don't know what the popcorn is.
Yeah, I do.
Okay.
All right, do we have to run?
You do.
All right. On that note, feel better, get better. Everybody stay warm. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We'll see you again, same time, same place on Monday.